Hello traders, it is Wednesday, August 7th in the evening and I'm recording my weekly video. Whoa, what a week. A week ago, Apple had not announced earnings when I did my last video. I knew the FOMC statement was coming up the day after and I warned all of you. I said, this particular point in time has the chance to be very, very bearish. So what did I do? I backed that up with 5 bearish picks and 2 bullish picks. And I said, listen, we really don't want to be bullish up at this high level. I want to be focusing on the bearish picks. I mentioned to you that the SPY needed to be below 299. And if it was, it would trigger our shorts. And I outlined a game plan for each and every one of those shorts. We made a killing. Most of these option trades would have been up 200, 300% easily in the matter of a couple of days. So I'll show you those in a minute. Before I get to that, I'd like to mention that everything that you see today is available on Option Stalker. Go to www.oneoption.com. We are using the Option Stalker platform. I am looking for swing trades, so you can use end of day analysis. You don't need to have a live real-time interface with interactive brokers or Tradier. If you're a day trader, obviously you would want to have that. You could trade right through the platform. But this is an incredible platform for end of day analysis. And I'm going to show you how easy it is for us to find some trades in a few minutes. I conduct these videos each week to show my members how to find trades using Option Stalker. They get this video instantly. I post it to YouTube a week later. So those of you who are not members can take a look at the performance week after week after week. This is a systematic trading approach. It works. If you like this video, please give it a thumbs up in YouTube. Also, please subscribe because oftentimes I'll release a video real time so that you can take advantage of some of these picks when they're actually happening. So www.oneoption.com. I have a trial that will cost you a whopping $1. Highly suggest that you take that if you're interested in what I'm going to show you tonight. So let's start with the market. Market first, market first, market first. Everything starts with the market. This is where the video was recorded last week, right here. I'd mentioned that Wednesday could be very, very bearish. Wednesday morning, Apple skyrocketed to a new all-time high. Market looked fantastic. We were going to be off to the races. You can see how the market was just within striking distance of the all-time high. What were we doing? We were looking for stocks to short. And you can see after the FOMC statement, the bottom fell out. We went from SPY 301 down to 281 this week. Lots of money. That's 200 S&P points. We had a big 100-point drop right there. So let's go through and take a look at how our picks did. Excuse me. Amazon was a short. That 100-day moving average was our target. We wanted the stock to drop below it. When it did, we wanted to short it. You can see how far that stock dropped. This is a natural profit-taking area, the 200-day moving average. That is a major moving average. You can see how the stock bounced off of it. This is where you should be taking profits. If you're an option trader, excuse me, on these drops, you need to take profits because the option implied volatilities are jacked way up. You do not want to wait until the stock finds support because then the option implied volatilities contract and you miss a lot of potential profit. So you want to be taking profits on the way down. Great trade. Amazon, fantastic. Boeing, you can see that it had already dropped below the 200-day and 100-day moving averages after earnings. and it also dropped very nicely from here to here. So from 348 down to 331, lots of profit to be made there. Ford, already below that 100-day moving average, kind of waffles around. I like the fact that it was not able to get back above the 100-day moving average. That would have been our natural stop, and then whoop, the bottom fell out. Now this went from $9, $9.60 down to $9. That might not seem like a big move, but for this stock, it's a $9 stock. It's a big move. You could have made some really decent money. Flex was a potential long for us, and actually, I'm going to highlight it right now. I like this stock long right here. This is going to be one of our bullish picks this week. I'm going to write it down. And the reason I will explain later. Like the big gap up, and I like that it held that earnings announcement, and it's bouncing off the 100-day moving average. There's a pattern we're going to look for today. Las Vegas Sands, look at that drop. We wanted the drop below the 200-day moving average. It was already below the 100-day moving average after earnings, so we liked it up in here. This was our stop for it, and look what it did. Went from 61.60 down to about $53, $54. And it's still going down even though the market was up today. PayPal, right here, wanted it below the 100-day moving average, down from 110 to about 101. Beautiful drop. UPS was a long. Still like UPS. Big gap up on earnings and the stock retracing. So let me tell you what we're going to look for today. So much money made this week. I've heard from all of you. Congratulations on the profits that you made. We really hit it nicely, and I didn't just leave you out to dry either in my daily market comments. I've been telling you after Monday's drop, take profits. Tuesday, take some more profits. Today, take some more profits. We had stops in place in the event that we got a bounce. Now, we're probably going to see an aftershock or two in the market. So we're going to go back to the SPY very briefly here because everything starts and ends with the market. So we had a big drop. We had another drop, another drop, another drop. Look at these bounces off of that support level right here at 281.60. That to me is a pretty significant support level, and it's above the 200-day moving average. I believe this level is going to hold for a while because the news cycle is very, very light. Earnings season is winding down. The Fed is done until September. Politicians are in recess. So there's not much going on right now. Economic calendar is light, on and on and on. August tends to be a very light trading month. Traders take time off, spend time with their kids before they go back to school. So we're going to see the volume dry up. And this big fall here is eventually going to compress, and I believe it's going to compress right around this 100-day moving average. So I think that the drop for now is over, but in the next 2 or 3 weeks, I would expect this 200-day moving average to be tested. So I like this 288 level right here. That is resistance. I would be a buyer above 288. I'd really like to get above this 289.60 level, the 100-day moving average. And in fact, it's not that far away. That's what we're going to use as our caveat. The SPY must close above 289.60 in order for us to take the long positions that I'm going to be showing you right now. By the way, you should be out of all of your put positions. Should have taken profits. We had a beautiful move, very short-lived perhaps. Take the money while the option implied volatilities are high. Avoid the time decay that we're going to have while the market goes into a compression. You want to be out right now. So we're going to patiently wait to see if the market can recover above the 100-day moving average. When it does, that will be our stop on a closing basis for all of our positions. So what I'd like to look for today, I want to find stocks that have rallied after the earnings announcement, gapped higher, And now, because of this huge market fall, have pulled back to that breakout and are starting to find support because they are still at their breakout. And now, if the market recovers, they're going to shoot higher and resume the rally. So how are we going to do that? Well, we're going to go into the custom search, going to click it. You'll see, this will only take us a few minutes. We're going to go into option liquidity. We want stocks with good option liquidity, right? I'm going to put 3 or better. These are liquid options. We leave the max that can be as liquid as possible. We like that. So we're going to go into earnings date previous. We want to find companies that released earnings. And I'm going to go back to the 22nd of July. This was a really heavy period for earnings. And we'll go to yesterday, July 6th. And then I'm going to add one more thing. Today the market really tanked on the open. This was the open right here. The S&P was down about 40 plus points right out of the gate, and then the market was grinding back. But it finished pretty flat for the day. I want to find a stock that was up today because that tells me that it was already defying gravity and it wants to move higher. So we've got good option liquidity. We have earnings in the last 2 weeks. We've got a stock that's above the prior day high. Let's click scan. This is our list of candidates. Now again, the pattern I'm looking for, and I'm going to just move this over to the side. This is not the pattern. Here's what would be the pattern. Earnings after the close, huge pop up, and then while the market's pulling back, stock drip, 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 comes back to this breakout level, but it holds. That is what I call relative strength. Apple did not show that. Although it is finding support here at the 100-day moving average, it's not the stock I'm looking for. The nice thing about this strategy is that by buying at this breakout right now, if the market happens to pull back, it should find support at that level, and our stop is very, very close. It's very, very tight. We should have support at that prior breakout. So let's see if we can find one. Nope. Just look for the A or the B, and this would signify earnings after the close. A B would be earnings before the open. Nope. Nope. Yep. Look at this, earnings before the open. So that's the open right there. Bristol Myers, big rally up, breaking that little downtrend in here. Nice. Right up to the 100-day moving average. This stock is trying to break out. Let's overlay the SPY. That's the gray line is the SPY. Market tanks. What's the stock do? It holds the gains. This stock wants to go higher. BMY makes the list. Now, for this game plan, we want BMY to close above the 100-day moving average. Then we can lean on that level for our stop. And I'm also going to put up another indicator. This will also show us relative strength. We want this orange line to be above 0. It's another indicator in the platform, toggle on, toggle off, just like the moving averages. So very, very user-friendly. So as we go back to the search, we got BMY. We already got one in the bag. Nope. Nope. It's just not getting any left after earnings. You could see it gapped higher and then it gave it all back. It's below the moving averages. Choppy, choppy, choppy all over the place. I can't figure out what this stock wants to do. Oh, yeah. Big, oh, yeah. After the close. Gap higher. Relative strength like there's no tomorrow. Stock makes a new high today. Definitely. ENPH. Big time. Big time. Nope, not bad. Stock has been in a nice uptrend. Got earnings before the open here. You can see the stock broke out before the earnings announcement. Maybe somebody had the news. Pulls back hard with the market. There's your earnings announcement. Yesterday was a fairly weak day for the market. Today it finally showed its colors. Sometimes it takes a few days for these stocks to show their true colors. That's why this post-earnings search is so powerful. So it looks okay. Nope. Nope. See how easy? Yeah, I like that. Here's your breakout, Coca-Cola. There's your earnings rally. Stock pulls back, fills in the gap right in here, holds its own pretty well relative to the market. See, the orange line is above zero. Got good volume in here. Today, boom, yeah, it's ready to move higher. So absolutely Coca-Cola makes the list. MA? Nope. Nice bounce off the 100-day moving average there. McDonald's? Yeah. I'm going to go back through and then I'll devise a game plan for all of these. NEM is a gold stock, so it's the anti-market. Maybe above this breakout right here. If the stock can get above this level, Procter & Gamble would be okay. We've got enough good candidates. No. Yeah, not bad. QSR. We've got enough good candidates here. I like this a lot. This is a very volatile stock. You can see how it's rallied from $210 to $340. Huge move. Shopify, hot stock. Earnings during this market turmoil. Gaps higher. Yeah, I just can't hold the gains with all this weakness, but boom, it's right back to that all-time high. This baby is going to go. I like it. I'm going to have to cull some of these out. I got too many. I don't want to have 10 picks. I want to have like 4 or 5. Nope. Not bad. Not bad at all. Gap higher after earnings, holding its own, relative strength. Yeah. Here you've got the big gap up and pulls all the way back to the breakout here. I think you could try Texan here too, Texas Instruments. So we've already got more than enough to pick from here. I'm going to go through 2 more. Nope. Nope. All right. You see how easy that was? It should have taken me like 5 minutes. If I didn't have to explain myself, 2 or 3 minutes, I'd have all these candidates. And I can save this search. Just save it. Yes, it's a bullish search. Just name it post earnings. I'm just going to name it post earn. And then here you can describe it, used option liquidity, blah, 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 earnings in the last 2 weeks. So I can save it here. And then when I go to the scanner and I click my searches, there's my post earnings search. So if you have favorite searches, they're very, very easy to edit too. I go into this little pencil tool right here. It brings up the search. I can change whatever criteria I want. So many criteria that you can use to find stocks, be it for day trading on shorter time frames. We use this in the chat room every day. Can't even tell you how powerful it is. And then the longer time frames for swing trading. I mean, on a day trading basis, I always like to see if the market is, let's say the market, for instance, today was down big time on the open. I like to mark stock greater than prior day high, liquid options, heavy volume. Show me a stock that's defying gravity, that wants to move higher, has liquid options, big volume. It's like gold. Anyway, this is for swing traders, this video, so I'm going to stick to swing trading. We're going to go into lists. I'm going to create a list, and I'm going to put in the symbols that we found, and this is August 7th. So I'm going to put in August 7th, and then I'm going to enter all the stock symbols that we have. We had FELX was the first one. We had BMY, ENPH, FIS, KO, MCD, QSR, TXN, TWTR, SHOP. Look at all these great candidates. Nine of them. Well, that's a bit many. I don't want to have 9. I want to have I want to have 4 or 5 really good picks. So I'm going to try and find which ones I think will perform the best. Bristol Myers has been in a downtrend. Bristol Myers is pretty choppy. I do like it. I do like this, but I'm going to pull it off the list. Really nice bounce. I think you can get up through this 100-day moving average, but we got to call some of these out. So I'm going to right click. ENPH stays. This baby is fantastic. So here's the game plan. We want ENPH. I would buy it right here, right now. I want it to hold that $30 level right there. That would be my stop on a closing basis. You can buy it now. If, remember the big if the SPY closes above the 100-day moving average. I'm not going to repeat this for every stock. The underlying caveat for every single long that I show you is the SPY must close above the 100-day moving average, which was 289.60, I believe. If that happens, you start going through this list and you start buying these stocks, and then you use the game plan. So the game plan is buy it and use $30 as your stop if we're above that 100-day moving average. I like this. It's a nice, strong grinder. Probably will perform well. Still has to get through this resistance level. Had a really big day today. I'm going to take it off the list. I think we can find better. Flex. This is a tough one. I'm going to take it off. I think it's going to do really well. Just trying to call the list on. Actually, let me keep moving on. Coca-Cola looks good. That's a natural stop for us right there at about the 52.20 level on a closing basis. We don't want it below this breakout again. We can buy it right here. That can stay. McDonald's pretty dang good. There's our initial breakout right there. We want that to hold. I believe that's about a $210 price level. Let's go in and check. I'll hover over the bar. I could actually find out that way as well. Actually, it's about 215. So that's your stop. You want that breakout to hold. This looks good. This stock wants to go higher. There's your earnings report. Really nice, strong trend. Shopify is a high flyer. You want it to close above this breakout at a new all-time high, then you can buy it. Twitter, there's your stop right there, is right on that horizontal line. I would use that. Right there is your stop, and you want to make sure that the stock closes above that 40, 50, 40, 80 level right there. It should go. This is really strong. Look at that relative strength. Texas Instruments is poking right above that horizontal breakout. I do like it here, and that's your stop. It's right there. If the stock closes below it, get the heck out. You know you can ride it back up to the high right around that 129 level. That's a $9 possible gain. If the market is just stable, I'm not talking about the market going higher and recovering all the losses in the last week. I'm talking just stable. These stocks should grind higher. The market loved the news, and they've pulled back to this breakout. This is a huge buying opportunity for a lot of these stocks. I'm going to stick with the stocks we've got right here. I like them all. I think the next video I show you, I don't know if the SPY is going to close above the 100-day moving average or not. I still think there will be some aftershocks. That's why I want to have that as a caveat. We could dip back down and test the 200-day moving average. My guess is we're going to close around that 100-day moving average for the next week, kind of waffle around it a little bit higher, a little bit lower, but it's going to be a sticky point for us. If my analysis is correct and the market volume drops off and the market hovers right around this 100-day moving average, every one of these stocks is going to do really well. Use those breakout levels as your stop. We want them to be preserved. Make sure the SPY closes above the 100-day moving average, and these stocks should be gold. All of this you can do yourself. If you just watch these weekly videos, I'll show you how to do it. I'm going to give you great stock picks week in, week out. You're going to learn how to do this on your own, and it shouldn't take you more than 5 minutes a night. That's it for this week. Thanks so much for watching.